Good afternoon, everyone. This is Henry, and as we get into tonight's free video, I wanted to bring you some ideas here in Tesla. So there are a few ways of looking at this, and I suppose it depends on whether you want the conservative or the aggressive approach. The aggressive trader would look at this and think, from an average true range perspective, you might think that Tesla is a bit oversold. We're going to use this as the mean, and this is the 3 ATR level, so you may be a little oversold, and a rally into earnings I don't think is unheard of. That's one way you could try to look to play a bounce. Another way you could look at it that really kind of helps remove a little bit of the directional assumption is to try, and let's just price this out and see if it will work as a strategy to maybe look at in the days ahead. But, to say that we're not going to get below 206, maybe we could call it 210, before this earnings report, and we're not going to exceed, and if we do something equidistant, let's just call it 270, which is a little above that mean. Maybe we need to be careful on this call side, but let's look at piecing out a strategy that, again, removes so much saying which way does it go, and tries to capitalize on earnings volatility that will remain elevated into the earnings report. You can see that here in this 21st of October series, and then trying to sell something in the series that is the 14th of Oct. So you're basically coming in and saying, okay, I don't think we're going to take out. We give ourselves 30 points to the downside. So let's sell the 210 put, and then let's sell the 270 call. That alone could be a viable trade. Again, it might be a little bit more risk to the upside should that really start to catch a bid and run. You'd want to be careful with it, but I like taking this idea of thinking about the range, selling that premium around it, and then going out into this further series to buy protection. Because instead of using something like that naked strategy, which is what we've been looking at so far, we can now turn this into a time spread by purchasing those same contracts in the series that will revolve around earnings. Now, of course, this transaction now goes for a debit. So it's definitely different than what we first looked at, but it still has that heart of shorting premium, in the middle of it. This isn't giving you the best point of view because the idea is your profit will mature up into the middle of that as time progresses. But this is one way I'm looking at Tesla right now, which essentially says that volatility in earnings series should stay propped up, and then pitting that against short premium strategies that will expire before that binary event is one way to get yourself away from just forcing directional trading, and I think can give some helpful insight as we get closer into those earnings numbers. So I hope that is helpful. You guys have a great rest of your evening, and I will see you in the next free video. Hey traders, this is Henry with simplertrading.com. I wanted to thank you for watching today's video. I hope you found it helpful, and if so, be sure to click the like and subscribe buttons down below. If you would like to also see me putting these ideas into action and trading my own account live in front of you, be sure to sign up at simplertrading.com. And I hope to see you in the chat room sometime soon.